Hello, I'm Justin Urquhart Stewart, and welcome back to those who've been here before, and those who haven't, you're very welcome to be here. Right, this is my weekly look at, I think, areas we should need to look at, and this week I think, and forgive me, it's talking about an overseas currency, the euro. It is actually rather important because it is the world's effectively second largest currency, covering the world's largest trading bloc. But it is a currency that has certain issues about it, to say the least. Remember, this was formed as a lovely concept to have a pan-European currency to try and ease trade and to be able to bond the really rather difficult continent together. After all, it does have an unfortunate history of quite regular conflagrations. Now, of course, it's been well over 60 years since the last conflagration, so far so good. And to that extent, the EU has worked. But the currency is something very different indeed. That's not just a matter of a trade agreement. Running a currency takes a lot of disciplines and running. After all, take the US dollar. The US dollar had to go through some interesting issues as the United States developed over time, not least of which, of course, having to manage an absolutely dreadful civil war. Now, I'm not suggesting we have to go through that in Europe, but the issue is this. If you're running a currency, you need some very specific disciplines. You have to have free movement of capital from one area to another, so that Florida, Portland can actually exchange money easily and there's no question. In the United Kingdom, money will flow from London to Edinburgh and back again, no question. Does money flow from Berlin to Greece so easily and back again? The answer is no, not so easily. You also have to have the same banking regulation over the whole area. And the European Central Bank has done a lot to try and make sure that's the case. So a lot of that has progressed quite well, particularly after the banking crisis of 2008, which made it just highlighting what a mess some of those banks were. In fact, some of them still are, but that's another issue. But the most important issue if you're running a single currency is the tax, the fiscal system. You have to make sure that everybody has the same fiscal structure and system. Doesn't mean the same taxes, but the same system. So in the United States, you have federal taxes, you have state taxes, you have city taxes, you have so many taxes I lose count. But actually, of course, in Europe and the United Kingdom, we have different taxes as well. But fundamentally, in the United Kingdom, we have income tax, national insurance and things like that, and a value-added sales tax. And although they may vary from Scotland to Wales to England and Northern Ireland, they're all roughly running in the same way. So it's a harmonized tax system. So we have a single currency in Britain known as the pound, and it sort of works. If, however, you actually found yourself with a different system and different area running a different tax system, then the single currency might not work. So take someone like Greece, who's not very well known for paying any taxes at all, actually, but has a very different attitude in terms of taxes and tax system than, say, the Germans, who are very keen to pay tax, but not everybody else is. So whilst you have these two things pulling apart, it's very difficult to run a single currency. Unless this is fixed, the euro will fail eventually. Not now, but in the future, unless this is fixed. It won't fail now because there are enough politicians, basically known as Mrs. Merkel, the Chancellor of Germany, who will make sure it works. And the Germans have done very well out of the euro. After all, everyone's bought Mercedes and BMWs at a much cheaper price called the euro. If they were in Deutschmarks, they're probably about another 20% higher. But of course, it doesn't work if you don't have that same tax system operating. So there are going to be further strains and struggles. Of course, this is not helped by the fact that Greece runs up a lot of debt, can't pay it back, and the Germans don't want to forgive them because they see no reason why they should be subsidizing a basket case of a currency, a basket case of an economy which isn't functioning properly. That's a bit unfair on Greece, but it's not good. So what can Europe do about this? Well, one thing it could do is actually split the currency. So you can actually have a domestic Greek currency, the tradable olive, and then the euro for its external issues. It's been done before in Belgium decades ago, also in South Africa about 60 years ago. And that would enable, therefore, the economies to adjust despite having a single currency. So watch this carefully. The euro has got a fundamental flaw, but it can survive if it has this reform and discipline. So keep a close eye on it. But for home base at the moment, stick with the dollar. You know what that's like. Good luck. Stay well. Bye-bye.